You're watching green. The position is up 3%, then 4, then 5. Your heart rate climbs with every tick. The dollar amount grows larger than your weekly paycheck, than your monthly rent. This is what you wanted. This is the winning trade. So why does your hand hover over the close button like it's on fire? You know the plan. You know the rules. Let winners run. Trail your stop. Patience beats impulse. Discipline creates consistency. But right now, in this moment, none of that matters. What matters is the fear. The fear that this green will turn red. The fear that you'll watch this money disappear. The fear that you'll be the fool who had it and lost it. So you click. Position closed. Profit locked in. Relief floods through you like a drug. You tell yourself it was the right call. You tell yourself that taking profit is never wrong. You tell yourself that you're being smart, that you're being disciplined, that you're protecting your psychology. But somewhere deeper in a place you don't want to look, you know the truth. You just ran from a winner. Again, an hour later you check the chart. The trade you closed is still running. It's up 12% now, 15, 20. The money you could have made keeps growing without you. The regret arrives in waves. You should have held. You should have trusted the plan. You should have had more confidence. Next time you tell yourself, next time I'll let it run. But next time comes and you do the exact same thing. Because this isn't about knowing what to do. Every trader knows that millionaires are made by letting winners run. Every trader knows that patience and discipline separate the amateurs from the professionals. Every trader understands the mindset required for long-term results. But knowing and doing are separated by an emotional pattern so powerful that it destroys more trading accounts than any technical mistake ever could. This is the regret pattern. And it's not about greed or fear. It's about something far more fundamental to how your brain processes money, risk, and the terror of losing what you've already won. Here's what nobody tells you about winning trades. They feel worse than losing trades. Not at first. At first they feel incredible. But as the profit grows, as the green numbers climb, something shifts. The emotion changes from excitement to dread. You start imagining everything that could go wrong. You start calculating how much you'll lose if it reverses. And the larger the profit becomes, the heavier that fear weighs on your chest. This is the paradox that breaks traders. You can hold a losing trade for days, watching it bleed, moving your stop loss, telling yourself it will come back. You can stomach a 5% loss, then 8%, then 12%. You can rationalize, you can hope, you can ignore your rules and abandon your discipline because somehow sitting in red feels normal. It feels like part of the process. But the moment you're up 5%, your brain starts screaming at you to close it. The psychology here is brutal in its simplicity. Your brain doesn't process profit as opportunity. It processes profit as something you now own. And the fear of losing something you own is exponentially stronger than the fear of a trade going against you. When you're down, you're losing the market's money. When you're up, you're protecting your money. This is loss aversion twisted into a weapon against your own consistency. Watch what happens in your body when a winner starts to pull back. Your heart rate spikes. Your breathing shallows. Your hands tense. The pullback might be 2% on a trade that's up 15%. But your nervous system responds like you're about to lose everything. Meanwhile, when a losing trade moves further against you, you feel almost nothing. Numbness, resignation. Your mind creates narratives about patience, about waiting for the bounce, about being disciplined enough to hold through drawdowns. But that's not discipline. That's cognitive dissonance protecting your ego from admitting you were wrong. The millionaire traders you admire don't have this problem because they've rewired this response. They've learned to feel nothing when green turns to slightly less green. They've built a mindset where profit belongs to the market until the trade reaches its logical conclusion. But you're counting that money the moment it appears. You're spending it, you're relieving debt with it, you're proving something with it, and every tick against you feels like theft. Here's the pattern playing out in real time. You enter a trade. Your plan says hold until technical resistance or trail with a 20% stop. The trade moves up. 4%, 6%, 8%. Now it's real money. Money that could pay bills. Money that could prove you're not wasting your time on this. The voice starts, just take it. It's a good win. Don't be greedy. Protect your psychology. You hold a little longer. The trade pulls back 1%. Panic. You close it. 8% profit. You feel relief and regret simultaneously. 2 hours later, the trade hits 15%. The next day, 25%. Your rules would have caught it. Your discipline would have let it run. But your emotion made you close it at 8. Now you're angry. Not at the market. At yourself. But next time the same fear arrives at the same moment and you make the same choice. Because the pattern isn't about the trade. It's about what money represents to you. It's about the confidence you lack in your ability to hold through variance. It's about a deeper belief that you don't deserve the big win, that the market will take it back, that you're not the kind of trader who catches the full move. And so you keep closing winners early, booking small profits, watching the big gains run without you. And every time you do it, you reinforce the neural pathway that says green is dangerous and must be escaped. You're training yourself to fear success. You're building consistency in the wrong direction. This is why mindset matters more than strategy. This is why psychology determines your long-term results more than any indicator or pattern. You're not failing because you don't know what to do. You're failing because your emotional system is wired to sabotage the very outcome you're working toward. Here's the truth you need to hear, the one that will either break you or remake you. Closing winners early isn't conservative trading. It's not protecting your psychology. It's not being disciplined. It's emotional trading disguised as prudence. It's fear wearing the mask of wisdom. And every time you do it, you're choosing the guaranteed pain of regret over the potential pain of a pullback. Let that sink in for a moment. You think you're avoiding risk by taking profit early, but you're actually taking on the worst risk of all, the certainty of mediocrity. You're guaranteeing that you'll never catch the moves that build real wealth. You're ensuring that your wins stay small while your losses, because you hold them longer, stay large. This is the opposite of the trading edge. This is the mathematics of slow motion account death. The millionaire traders you study, they're not smarter than you. They don't have better strategies. They don't have access to secret indicators or inside information. What they have is a completely different relationship with profit. When they see green, they don't see money they own. They see a trade that's working. They see confirmation that their analysis was correct. They see an opportunity that's proving itself. And critically, they see a chance to let the market show them how far it wants to go. You see money, they see process. You feel ownership. They feel validation. You experience fear. They experience patience. This is the psychological chasm that separates consistent profitability from perpetual struggle. And the bridge across it isn't built with willpower or motivation or trying harder. It's built with a fundamental reframe of what discipline actually means. Right now, you think discipline means taking profit when you have it. You think it means protecting your account. You think it means being responsible. But that's not discipline. That's impulse control failure dressed up as risk management. Real discipline is following your trading plan when every cell in your body is screaming at you to deviate from it. Real discipline is holding a winner through a 3% pullback when your plan says to trail with a 15% stop. Real discipline is trusting your system more than your emotion. And here's where it gets uncomfortable. The feeling you get when you close a winner early, that relief, that sense of safety, that voice saying you made the smart choice. That's your brain rewarding you for emotional trading. You just reinforce the neural pathway that says when you feel fear, close the position. You trained yourself, you created consistency in sabotaging your own edge. The professionals feel the same fear you do. They feel the same dread when profits pull back. Their hearts race too. Their hands tense too. The difference is that they've built a system that removes the decision from the moment. They don't close positions based on how they feel. They close positions based on what the chart shows. They trail stops. They have predetermined targets. They have rules that execute regardless of the emotional weather inside their skull. This is where confidence actually comes from in trading, not from being right, not from winning. Confidence comes from following your rules even when it's terrifying. Confidence comes from holding through a 5% pullback on a 20% winner and watching it continue to 30% because your stop never got hit. Confidence comes from looking back over months of trades and seeing that every time you followed your plan, the results took care of themselves. But you can't build that confidence until you accept one brutal reality. The discomfort you feel when holding winners is not a warning sign that something's wrong. It's a sign that something's right. It's a sign that you're in a position that has real potential. It's a sign that you're doing something different than the losing trader you used to be. Think about what you're actually afraid of. You're afraid the profit will disappear. You're afraid you'll look foolish for not taking it when you had the chance. You're afraid that holding will prove you're greedy, undisciplined, reckless. But let me ask you this. Is closing a winner at 8% when your plan said 15 really discipline, or is it just fear pretending to be prudence? Here's the reframe that changes everything. Every time you close a winner early, you're not making a conservative choice. You're making an aggressive choice against your own system. You're betting that your fear-based judgment in the moment is more accurate than the rules you created when you were calm and objective. You're trusting emotion over data. You're trading with your amygdala instead of your prefrontal cortex, and you're doing it over and over again, wondering why your results never improve. The pattern breaks the moment you realize that the risk isn't in holding. The risk is in closing, because when you close early, you guarantee small wins. And when you combine small wins with the losses you inevitably take, the math doesn't work. You need winners that are multiples of your losers. You need consistency in the right direction. You need patience that compounds into long-term results. Let me show you what this looks like in practice. You take 10 trades. You win on 6 of them. You lose on 4. If you close every winner at 8% profit and hold every loser to your 10% stop loss, you make 48% on the winners and lose 40% on the losers. Net result, 8%. That's your edge. Now run those same 10 trades, but this time you hold the winners according to your plan. 3 of them hit 10%, 2 hit 15%, 1 hits 30%. You make 90% on the winners and still lose 40% on the losers. Net result, 50%. Same strategy, same win rate, different mindset. The difference between spinning your wheels and building wealth. This is why closing winners early is the most expensive mistake in trading, not because any single instance destroys you, but because the cumulative effect over dozens, hundreds, thousands of trades drains away the edge that your strategy provides. You're systematically cutting your profits short while you're losing trades run to full size. You're reversing the fundamental axiom of successful trading, and you're doing it because your brain is wired to seek relief instead of results. So here's what has to change. Not your strategy, not your indicators, not your time frame or your position size or any of the technical elements you keep adjusting. What has to change is your definition of what a good trade is. Right now, a good trade is one that ends in profit regardless of how you got there. From now on, a good trade is one where you followed your plan regardless of the outcome. That's the shift. That's the psychological breakthrough that separates amateurs from professionals. When you close a winner at 8% because your fear overwhelmed your rules, that's a bad trade even though you made money. When you hold a winner through a pullback according to your plan and it eventually stops out at break even, that's a good trade even though you made nothing. This is what discipline actually means. This is what consistency actually requires. This is what separates the trader who stays broke from the trader who eventually becomes a millionaire. Because here's what happens when you start measuring yourself by process instead of outcome. You stop being afraid of holding winners. The fear doesn't disappear, but it stops controlling you. You feel the dread when profits pull back, but you check your stop loss instead of checking your emotions. You experience the voice that says close it now, but you respond with the rules instead of with impulse. And slowly, trade by trade, week by week, you build a new pattern. You build the pattern where green doesn't mean danger. You build the pattern where pullbacks don't mean exit. You build the pattern where following your plan produces calm instead of chaos. And eventually you look back at your trading journal and realize that your average winner is larger than your average loser. Your profit factor is above 2. Your consistency is no longer in the wrong direction. You've broken the regret pattern not by eliminating the emotion, but by changing what you do with it. This is the discipline that millionaires practice. This is the mindset that produces long-term results, not the absence of fear, not supreme confidence, not some mystical state where money doesn't matter, just the simple, unglamorous commitment to following rules when following rules is uncomfortable. Just the daily choice to trust the system you built more than the emotion you feel. Just the patience to let the market show you what it wants to do instead of forcing your need for safety onto every winning trade. And here's the final piece, the one that makes all of this possible. You have to stop measuring your trading success by individual trades and start measuring it by how well you execute your process. When you close a winner early, you didn't protect yourself. You failed. When you hold a winner according to plan and it reverses to your stop, you didn't lose opportunity. You succeeded. The money will follow the process, but only if you redefine what success actually means in trading. This is what separates the trader who makes 8% from the trader who makes 50% with the same strategy. This is what separates the trader who quits after 2 years from the trader who's still compounding a decade later. This is what separates the person who knows what to do from the person who actually does it. It's not knowledge. It's not intelligence. It's not even talent. It's the willingness to feel uncomfortable in winning trades because that discomfort is the price of admission to real profitability. You can't avoid the psychological work. You can't shortcut the pattern. You either build discipline in the direction of your rules, or you build consistency in the direction of your fear. Either way, you're training yourself with every trade. The only question is, what are you training yourself to become? So where does this leave you? Right here, in this moment, with a choice. The same choice you'll face tomorrow when you're in a winning trade. The same choice you'll face next week, next month, next year. The choice between the comfort of closing early and the discipline of following through. Between the relief of escaping fear and the patience required for long-term results. Here's what I want you to do. Not tomorrow, not next trade. Right now, open your trading journal or create one if you haven't. Write down this single rule and make it non-negotiable. I will never close a winning trade based on emotion. I will only exit according to my predetermined plan. Sign it, date it, make it a contract with the trader you're becoming. Then, the next time you're in a winner and the fear arrives, I want you to do something specific. Take 3 breaths. Deep, deliberate, slow. On the first breath, acknowledge the fear without judgment. I'm afraid this profit will disappear. On the second breath, state your rule. I hold until my stop is hit or my target is reached. On the third breath, check your plan. Is your stop loss still valid? Is your target still reasonable? If yes, close your trading platform and walk away for 20 minutes. The fear will still be there when you return, but it will no longer be controlling you. This is not a motivational technique. This is a practical tool that rewires the neural pathway between fear and action. Every time you feel the fear and follow your rules anyway, you weaken the connection between emotion and impulse. Every time you breathe through the discomfort instead of escaping it, you build the confidence that comes from trusting yourself. This is how discipline becomes automatic. This is how consistency becomes your identity. The millionaire traders who've been doing this for decades will tell you the same thing. The money isn't made in the entries. It's not made in the analysis. It's not made in finding the perfect setup or the optimal indicator. The money is made in the holding, in the boring, uncomfortable, psychologically demanding work of letting winners run when every part of you wants to close them. That's the entire edge. That's where wealth compounds. That's where the separation between 8% annual returns and 50% annual returns lives. And you need to understand something about this journey. You will close winners early again. You will feel the fear and click the button. You will watch the trade continue without you and feel the regret. This is not failure. This is data. This is feedback showing you where the pattern still has power over you. The difference now is that you'll recognize it. You'll see it happening instead of being unconscious of it. And that awareness is the first step toward change. Every professional trader you admire has closed winners early. Every millionaire built from trading has felt the exact fear you feel. The difference is they kept showing up. They kept tracking their trades. They kept measuring themselves against their process instead of their profit. They kept building the psychology that allows money to flow instead of the psychology that chokes it off. Your relationship with money, with risk, with confidence, it's all being shaped right now by what you do when you're in a winning trade. If you keep closing early, you're training yourself to fear success. If you start holding according to plan, you're training yourself to trust the process. Both paths create consistency. Both paths compound over time. You're choosing which pattern becomes your default. So here's the truth I'll leave you with. You don't need a better strategy. You don't need more capital. You don't need a lucky break or a mentor or some secret edge. What you need is the willingness to feel uncomfortable in winning trades. What you need is the discipline to measure yourself by execution rather than outcome. What you need is the patience to let your edge work across hundreds of trades instead of sabotaging it every time emotion spikes. The regret pattern breaks the moment you decide that following your rules matters more than feeling comfortable. Not when you want to, not when it's easy. Right now, with the next trade, with the next winner, with the next moment when fear whispers close it and you respond with check the plan. That's where the transformation happens. That's where amateurs become professionals. That's where the long-term results you're working toward finally start showing up in your account. Not because the market changed, because you did. The choice is yours. It always has been.